Hey Tom, this is Isaac, and I was thinking about you today or yesterday, and thinking about how you were asking about levels, okay? And I know you're struggling to find good levels to trade off of, and trying to find a methodology to do that. And I wanted to share something with you that has been helpful for me. And then actually, yesterday I was able to take a really nice trade. And I did it using this methodology I'm going to share with you right now. Um, so I just do this because I know you're struggling, and I know what it feels like to struggle because, I struggled for, I would say, years before I started getting my rhythm. It's kind of interesting to see people like Megan show up, start trading 3 or 4 months, and start getting payouts. I have no idea how she's doing that. Like, I, if I could have showed up and started making money after 3 or 4 months of doing this, man, I would just be a different person. But I think the normal way for like 99% of people is to struggle for a long time because there's just a lot going on with trading, psychologically, emotionally, technically, computers. I mean, it's the whole thing, the software, what broker, what trading platform, what sizing, of your lots, like where you put a stop, what kind of setups, what kind of patterns. And there's just so much to know. And so that I sympathize with you that you've been struggling, but it really sounds like you want to do this. And I never gave up, and I never will give up because I really enjoy trading. And it's just the challenge of it, I think, for me is one of the most important parts of why I like it, because it is hard, but there's always something to learn. And anyway, so I just wanted to kind of share with you um, what I did yesterday to make a good trade. And the idea behind all of this is that, yeah, levels are really important. And you gotta figure out what levels make sense to you. Now, I want to share with you a trading idea about finding levels. Okay, so it has to do with Fibonacci retracements. And when we talk about Fibonacci retracements, what we're just talking about is, if there was this guy Fibonacci, and he was a mathematician, and he kind of noticed that in nature, certain percentages kind of popped up over and over and over again. And I think they have to do with prime numbers. I'm not totally sure. I just know that in trading, there is a Fibonacci tool which gives you these levels, and price does definitely respond and react to these levels. And what I mean by levels is that, for example, the way I think about Fibonacci and the way I use Fibonacci is that I look for an initial impulse wave in the market. All right. So there's an initial impulse wave where price takes off to the upside. It's much more pronounced than, say, like, let me a lot of the chop and the noise that comes before it. And then all of a sudden you'll just have this boom, right? Something that makes you stand up and take notice, right? So then what you're looking for is a pullback. And so with Fibonacci retracements and extensions, what you're doing is you're using as the basis for your levels that you're going to create, you're using the initial strong wave as the top and the bottom. And then within that section, you're locating percentages of the move. Okay. So for example, here, um, Trading View, I don't know if you're on trading. I don't think you are. I think you're probably a Ninja, but Ninja probably has a Fibonacci retracement tool also. So basically, you measure right from the top of the move to the bottom of the move, okay, and that's going to give you these levels, okay. You said you're trying to figure out levels. I'm offering you some levels, okay. That's what's going on here today. All right. So now the levels that you see here are 0.236, 0.382, 0.5, 0.618, 0.786, 1.0, and then above you've got 1.618 and 1.2618 and 3.618, 4.236. Okay, so basically these levels below 1.0 within the initial move are the retracement levels, okay? And these moves above are the extension levels. So just something to keep in mind. Retracement is below 1.0, extension is above. And what we typically find is that price, once there's been an initial wave like this, will often pull back to the area around the 0.5 area. Okay, so it usually pulls back to within this zone here, the zone just below the 0.5, with the low and the high of the zone at 0.618. So the level below and the level above 0.5. Okay, halfway back. So price tends to move halfway back and consolidate, okay, and then take off to the upside. So basically, we're looking for price to come back into this area and then to pivot. And then generally speaking, the targets can be, the initial target usually will be this one. And then if it's really got some steam in it, it can sometimes go to this one. But if you are the type of trader like me that doesn't really need a lot out of a trade, like maybe a 1-to-1 or a 1.5-to-1 risk to reward, then you can just once you decide where you want to get in, I'm going to clean this up a little bit and take some of these lines off of it. Once you decide that, okay, I want to get in, like I like price action, basically your candles come down, come down, come down, come down, and then you start seeing that pivot happen, like especially with the hook on stochastics, right? That happens, and you get in, say, let's say you get in like somewhere around here, you put your stop down here, okay. I only need like a 1-to-1 or maybe a 1.5-to-1, and so I'm getting my target can easily be the first level of extension, okay, and I can have a great trade out of that. So I don't need it to go way up high. So basically, I'm going to show you how you find a good way to locate these, and you can find these Fibonacci waves all over the place, okay, and then it becomes like a science of like, how do you decide what constitutes a initial wave, right? An initial wave that you want to look for an extension on, right? Because basically what you're trying to do is you're trying to identify somewhere on the chart where you see a wave pattern or you see a top and a bottom of a candle, okay? You want to identify what candle makes sense for your goals, okay? And so what I'm going to share with you right now is how I'm finding that where I want to set these levels up, okay? So let's look at yesterday's price action as an example of how I would identify, okay, where I want to trade from, basically where I want to set those levels that I just showed you. Okay, so this is a 5-minute chart, okay, of the NASDAQ 100. I know you trade ES, I don't, so I'm just going to show you on NASDAQ. The same probably would be true for ES. You check it out for yourself, okay? Now we know that in the first, we know that we want to trade during the first hour and a half. That's a given. The best trades are always going to be in the first 90 minutes of the market. That's always been true. It always will be true. It's been true as long as I've been doing this, and I'm sure that it always will be the case, okay? Sure, you can trade before in the pre-market, sure, in the Globex, sure, you can trade, in the afternoon session. I know Brian likes to go in the Premier Clubhouse and trade in there, and he always talks about that. I never go in there, and that makes sense because if you look at 1400, there's definitely moves happening, good moves happening, around that time. But for me, it's like the first 90 minutes. So let's kind of take a look at these, and I'm looking at a 5-minute chart. I know that he primarily looks at tick charts, and I have fast charts, and I'm looking at fast charts too. But sometimes it's really a good idea to slow things down a lot and look at the overall, back up a little. I mean, 5 minutes isn't even that long of a time frame. But back up a little into a 5-minute chart and get a feel for what's going on with the market. For example, here, yesterday on Monday, we had a huge gap up in the NASDAQ, like a big gap up. And, why? Because China, there was positive news that Trump was going to, kind of break through with the China thing. So there was going to be a deal. So that market loved that, and it just gapped up, and it just Globex went, just basically very strong uptrend, and you would expect it to continue in New York, and it did, right? But obviously, the first half an hour or so of trading is very frenetic. It's very choppy, like moves up, moves down, as evidenced by these very long wicks. And wicks are nothing but a sign of rejection of an area, right? So price went down and wicked right back up. Price went down and wicked right back up. Price went down and wicked back. And you would expect that in an uptrending market, right? Because the trend is up, obviously. And so you're looking for long. I mean, basically, you got a long bias. If you're paying any attention to what's going on, prior to the open, if you read the news, if you look at Globex, if you see the gap up, you can see long is the way. If you're not long, you're wrong, right? I mean, this is just like basic stuff you got to like think about. Do your quick analysis before the market opens. Figure out, do you have a bias? And I had a bias to the long side because of everything I just showed you. Okay. It doesn't take very long to figure that out. It takes about 3 seconds, actually. You take a look at Globex, take a look at the news, see the gap up, see the move up. You get a long bias, okay? So I'm looking for longs, but the thing is, I want to buy a pullback. If I'm gonna go long, I'm not gonna buy at the top of a move, right? Why? Because price always oscillates up and down, up and down, up and down, right? That's all price ever does, right? Sometimes it oscillates up and down and sideways, right? But if it's trending, it's going to be up and down, up and down. So I want to buy a pullback so that I'm not getting caught at the top of a move. So if you're looking at the 5-minute chart, okay, yeah, these wicks do represent pullbacks, okay, but they're kind of choppy and kind of fast. What I'm more interested in is finding something that it's very obvious that it's pulling back and it's going to give me a chance to get in. So when I'm looking at this, I'm seeing, okay, around, if I'm looking at this on a 5-minute chart and I want to see a 5-minute pullback, that's something that I can actually get into and find a good level to trade off of, I'm going to wait until I see this. Okay, this is what is really jumping out at me, okay? And then when I see this pullback happen here, at the end of the pullback, what do I see? I see a doji, okay? What is a doji? A doji is nothing more than a candle with kind of equal tops and bottom wicks on it and kind of a smaller body. And what that's telling you when you see a doji is that, okay, so the buy and the sell pressure have kind of equalized on this candle, right? You got kind of like the same amount of people that are pushing it down is the same amount of people that are pushing it up. So buy, obviously sell, a lot more sellers in these candles here, right? But here, buyers and sellers have kind of equalized themselves as evidenced by this spinning top, right? So that's telling you there's a pretty good chance of a reversal on the next candle. So that's just something to keep in mind. So if when you see a push down and then you see a doji, okay, you can figure that the next candle is probably going to be moving up. Now, how do you get in when you know that something's going to be moving up, right? You still need to buy a pullback, right? So this is a time when I would take my Fibonacci tool and look for a level, okay, to buy a pullback on. And I'll look at that. Once I set the level, I'll switch over to a faster chart, okay, and I'll show you how I manage the trade on a faster chart and take my trade on a faster chart. So let's take that Fibonacci retracement tool. We're gonna set the top at the top of that doji and the bottom at the bottom of that doji, okay? Now we don't see this yet, right? this is all we see. But we can still, once that, the minute that candle completes, that 5-minute candle completes, then I can take the area, okay, that's, the candle is invisible, okay, so basically I'm just going to kind of show you in real time, real life, what it's going to look like. I'm basically putting this on blank canvas, okay, I have the doji next to me, right, that just completed. I'm taking the high of it and the low of it, and it's putting it in thin air, right, like this is the level, okay? And remember how I talked about before that the levels I'm the most interested in is the 50% and the one below and the one above. So I'm looking for price to pivot inside this area of one above, one below, okay? It's just the 50% will be the midpoint of that move, and I'll be looking for a pullback into that area, right? Actually, this for some reason this isn't, drawing tool isn't working, but because it's sitting on this. It's sitting on this. So basically I'm looking for a pullback into this area, right? And for it to go up, okay? So that's what we're going to be looking for once we put this on. So let me put my candlesticks back on. Okay, and what I'm going to do here is I'm going to sync this so that I can see it on my faster charts too. Okay. So now let's get into the faster charts and see what things look like. All right, so this is what price action looked like in that chart. And I use what are called Heiken Aishi candles, HA candles. Heiken Aishi candles, smooth. They average the candles together like this one and the one before, so that the color change is more representative of the trend change, if that makes sense. Okay, so here you can see that this new 5-minute candle started right here at 1025, and it's kind of bouncing around, and yeah, it kind of almost touches the 50. But if you look down at your oscillator, which I guess you use stochastics, I use MACD, you know, things aren't really, you know, you could kind of maybe think that, okay, you're in the zone here, but you don't really have a real kind of like pullback, you know? So I'm just kind of sitting there waiting to, it hasn't even touched the 50% mark yet, right? I'm just waiting for it to hit the 50% mark and then see what happens. So that's what I'm looking for, and that's what I was looking for yesterday just before I took my trade, right? So finally, you know, it does this sudden move down to the 50% level, okay? And it kind of bounces off the level just below, which is the 0.382. And so now I'm kind of like, now I'm interested in to see what's going to happen, right? So now I'm looking for a bounce, okay? And usually with Heiken Aishi candles, you'll see a doji, right? This is a microcosm of the macrocosm, right? Because you'll see a doji, and then you'll see candles that have flat bottoms, okay? And what that means is that price never goes below the opening price on that candle, and that's very bullish. So now I'm just kind of waiting for my stochastics to kind of turn up, and they do start turning up down here. You can't really see it very well. Okay, here's your hook to the upside, right, on stochastics, which is basically for MACD. So anywhere in here, right, would be good to get in, because why? You've hit the 50% on the fib. You're bouncing up. You got green candles. You got a color change. Now you got green candles, right? Your oscillator is pointing up, right? And it's time to get in. So I got in somewhere around here, and then all of a sudden, what happens? Price does a massive spike, right? I mean, it hit my target pretty quickly. I think I had a 15-point target on it, and I went from like 37 or 38 up to about 53, like just like in a heartbeat, you know? And it easily hit that extension target right there. It never made it up. Actually, it did make it up to the next level up here. You can see this target up here, which is close to the 77. But anyway, that's the way I took that trade, and I actually made like $4 grand off that trade. because I'm risking, you know, a lot, but I want to make a lot. So as you saw my numbers yesterday, I had one trade where I lost 2,900, but I had two trades where I made over 4K. So that's kind of how I'm playing the game right now. Anyway, that's a level, a way of identifying levels, and I just want to share that with you. And if you want to do some homework for me, I mean, I'll never charge you for coaching you. Um, but if you want to do some homework for me, maybe you can go and look around and see if you can find on your charts. You can look back on 5 minute charts like the last few days, you know, around this time frame between 10 and 11 a.m., and see if you can see any pullbacks that resulted in a doji, which then resulted in a nice move up after that. And maybe you can also, if you have a fib tool, maybe you can take a, you know, a screenshot of where you would put the Fibonacci levels based on the doji, and where you would kind of like, you know, enter the trade and how you would manage it, etc. So I'm open to that if you want to email me that. But I would like to see that. I would love to coach you a little bit. I think I can help you, maybe, if you kind of want to try. I would never charge you, but I'm interested in coaching somebody right now because I think it helps me too. So anyway, that's it for now. I don't know if you have any questions or not, but if you do, just go ahead and text me. You got my number. So that's it for now, and I hope all is well with you.